Is that not illustration 4?
Yes, IV.
Yes, read out.
Okay. The trial balance of move ahead trading enterprise, a sole trader as at 31st December 2018 is given below. Then we have furniture and fittings, 30,000 Ghana cedis. We have depreciation, that is 5,000 Ghana cedis. Motor van, 40,500. Depreciation, 8,000. Then we have sales, 85,000. We have purchases, 45,500. We have inventory, assets, 32nd, no, it should be 31st.
31st, sorry.
31st, yeah. 31st December 2017. We have it as 16,400 cedis. We have sales returns of 4,900. We have purchases returns, 2,500 Ghana cedis. Carriage on purchases, 3,000 Ghana cedis. Wages, 12,500 Ghana cedis. Discount received, 5,520 cedis. General expenses, 6,000 Ghana cedis. Discount allowed, 4,600 Ghana cedis. Delivery expenses, 3,000 Ghana cedis. Insurance, 2,700 Ghana cedis. Bad debts, 1,900 Ghana cedis. Advertising, 3,320 cedis. Rent and rates, 5,000 Ghana cedis. Salaries, 6,000 Ghana cedis. Carried out was 2,750 cedis. And then we have income on investments, which is 1,900 cedis. We have loan, 50,000 Ghana cedis. Interest on loan, 5,000 Ghana cedis. Motor repairs, 1,850 cedis. Bank charges, 3,000 Ghana cedis. Drawings, 10,000 Ghana cedis. Investment, 35,000 Ghana cedis. Capital, 100,000 Ghana cedis. Trade receivables, 10,000 Ghana cedis. Trade payables, 8,000 Ghana cedis. And then we have, so there's a figure down there, I don't know what it is. 200.
That is the total.
Okay, so that's the total.
Trial balance.
Okay. Okay, so we have it there. And then the inventory at 31st December 2018 was 19,500 Ghana cedis. So the requirements, we are required to prepare income statement accounts for the year ending 31st December 2018. And then the statement of financial position as at 31st December 2018. So that is it. Yeah.
Thank you very much. So we are going to use this question, which contains almost all the items that will be used to explain the income statement. But in exam, it doesn't mean you get this gamut of loaded items. It might be a simple one. So here, I encourage all of you to pay attention and also have your jotters or your sheet of papers with you and follow me whilst I take you through. I've given you the format for the income statement, which is on the first two, first first 4 pages. Is it first 4 pages? Yeah, I think first 9 pages. I've given you a detailed format, 1, 2, 3, 4, first 4 pages. I've given you a detailed format of the income statement and the statement of financial position. If you have gone through, then you be on the same page with me whilst I take you through this applying the format. So in a business, the accounts department goes through recording of transaction on daily basis. Then at the end of the day, they record those transactions in the appropriate books of account, known as the day books. Then at the end of the day or the period, the week, the month, what they do is that they now transfer the various transactions from the day books into the ledgers. Then in the ledgers, accounts are closed to determine the closing balances by balancing off the account. Then the closing balances are used to strike the trial balance. And when the trial balance is struck and it's equal, then it tells the account officer or the accounts department that all the double entry principle they did in the course of the transaction period are correct. If they do not agree, then they have to go back and check where the challenge is coming from and correct those errors. Because if there is any challenge, it might be an error. The error, no matter the type, it is an error and must be corrected using the correction of errors principles. Now, after these are done, then the trial balance figures will be used to prepare the final account. And the final account comprises of the income statement, statement of financial position, statement of changes in equity, cash flow statement, and what have you. So we are done up to the striking of the trial balance. So we are moving on to use the trial balance figures to prepare our final account. And the first final account we want to deal with is the two main final accounts that the examiner or the questioner has requested us to do is the income statement account and the statement of financial position. So these are the two we are going to concentrate our energies on to unravel right now. Any question? With this explanation, any question? If no question, give me the go ahead. Let me start with the preparation of income statement.
Go ahead, please.
Right. Okay. So let me scroll to my question. So we have the business name known as Move Ahead Trading Enterprise. So that name must come. Move Ahead Trading Enterprise. And what we are looking for is we are preparing income statements accounts for the year ending When is the financial year ending?
31st
When is
December.
the financial year ending for this business?
31st December 2028, 2018.
31st December 2018. I hope you can see my screen.
Yes, sir.
Yes,
Yes,
sir.
sir.
Yes, sir.
Thank you. So after this, we can have our currency signs here. Okay. Why do you think I'm using 3 currency signs column? Can anybody explain? I don't know if I explained before in class.
Hello, sir.
Yeah.
Please, this Festus.
Next time, put up your hand.
All right, thank you, sir.
Yeah, Festus, go ahead.
Sir, one will be for the debit entry, one will be for the credit entry, and then one will be for the list of like the sub list. So let's assume that when anytime you see add minus, it's like less, those items will be taking the very first column, then the debit and then the credit. Thank you, sir.
Okay, thank you. Any other person?
Yes, sir.
Yeah, Enoch.
Sir, the reason why we use the 3 currency sign is to improve clarity, organization, and reliability by providing a structured step-by-step calculation of the net profit.
Good. Thank you. Clarity, step-by-step organization of the financial statement. Okay, that's great. That's very good response. Any other? Just as the first speaker also did. You all have a good response. Any other? Anybody else want to share his thoughts? Any other person? Nobody? Okay, Kwesi Apau.
Yes, sir.
Yeah, go
Sir,
ahead.
what I know is the first column is used for, let's say, the detailed figures transactions. And the second one too is for the subtotal. And the last one will be the final figures, like after subtracting everything from it. So that's how I understand it. So the first one is detailed, second is subtotal, and the last one is the final figure.
Okay, thank you very much. Thank you. You have brought in some new insights into the responses. That's great. Okay, so Hassan, why have you unmuted yourself? Apple, put down your Harrison. Enim Ode. Harrison, have you
Okay,
spoken
sir.
already?
Yes, let me try, sir.
Okay.
Okay, so as we are looking at the income statement, we know, I think we'll first look at our sales, then we'll look at our cost of sales, and then we'll look at our profits. So the first column, I think, will be for the calculation for the cost of sales. The sales will take one column, or let's say the second column. The sales will take the second column. And then when we are done with the cost of sales, we will take it out from the sales, and then we'll get the gross profits. Then when we take out our expenses, we'll get our net profits. So finally, the net profit, I think, will be at the last column. I don't know if I'm on track.
Okay, all right. You have also said something which has a relation with what we are going to summarize. Okay. Thank you very much for your responses, for your contribution to making the class successful. Yeah. The first speaker and Harrison Enim Ode. You have the idea, but you are not able to posit them well. So the first speaker, this three currency signs has nothing to do with debit, credit. This is not a trial balance. This three currency sign has nothing to do, has nothing in a link with debit, credit. Then the last speaker tried to manufacture his way through, bulldoze his way through to try to position where the gross profit, net profit, and co will be. So I said, all of you have the idea, but its explanation is the challenge. Now, the second and third speakers, they hit the nail right on the head. So I want to streamline their responses. The first two from your left are for adjustment of figures. And the last one, which is the first one from the right, are for final figures. So if you realize, the last speaker said what? The third speaker, he said what? The second one is for adjustment, and the third one is for the final figure. But the first one is what he missed, but I agree with him. He said it is for the details. When you say details, what do you mean? So the first figure, where you record the transaction under the first figure, what it means is that you need two-step adjustment before you get to the final figure. The middle sign, which is the second from the left, when you put the figure there, it means you need just one adjustment to get to the final figure, which will be recorded under the third from the left or first from the right. Are we okay?
Yes, sir.
Yes, sir.
So the second and the third speakers, they have the knowledge and they had it right. So I'm only polishing what they said. So from the left, the first and second are for adjustment. And the third one from the left is for recording final figures. So we are going to apply them. As we are doing it, I'll be mentioning it so that you can follow suit. Yeah, Harry.
All right, sir. Sir, I also think that you have to visit the number of columns, like the 3 columns that we have created for the currencies. I think it is dependent on the steps taken in arriving at each. So let me take it this way. For example, I think there are 3 columns in the income statement. First,
Yeah.
we have the sale. Second, we have the cost of sales. And then last, we have either the profit or the loss. So I
let me
think it is
correct you here. Let me correct you here.
okay, sir.
These are not columns.
Okay,
These are subdivisions of the income statement.
okay,
The revenue, cost of sales, and then the net profit.
good.
Go ahead.
So I think those subdivisions called for the 3 currency signs.
Okay. Let me correct you again.
Okay, sir.
This income statement, I can solve it with you using just 1 column.
Exactly. That is what I wanted to.
I can solve it with you using just 1 column, but it will be too complex for you to understand.
Okay.
And that one, we use lines to differentiate the figures.
Okay.
So when it comes to adjustment too, it will make it clumsy.
Yes, sir. I now get you, sir. Thank you.
Thank you for getting it.
Yeah.
Any other? I want us to draw the basis well before we kickstart. Any other? So can we make progress? Cost rep, can we make progress?
Yes, sir.
Thank you very much for giving me the green lights. Okay, so we go back to the question. Please stay glued to your question. I'm coming. Okay. Oh, good. Okay. All right, so we begin for the income statement. The first item is sales. It could be sales, it could be turnover, it could be revenue, it could be takings. So here we have sales. Now, if the sales figure is supposed to be adjusted, then we'll have only 1 step to adjust it to get a final figure. And how are we able to tell if the sales will be adjusted? The only thing that will cause the sales to be adjusted is sales returns or returns inwards, meaning goods that we sold. Some of the customers were not okay with the goods, so they, after paying for it, they took it home and they brought it back to us. They brought it back to us based on reasons best known to them. And if the business allows it, that yes, goods bought can be returned, then those customers have the right to return the goods if they have any issues with the goods. So the only thing that can cause the sales or revenue or turnover to be adjusted is when there is returns inwards or sales returns. So in a trial balance, please go through. Do we have sales returns?
Yes, sir.
Yes, sir.
Good. Right. So it means we'll record the sales here under the second currency sign, either from the left or from the right. So what is the sales figure? What is the sales value?
85,000.
85,000. Okay. Then, because there is sales returns, so we come here and we say less. Is it sales returns in a trial balance?
Yes.
Okay,
Yes, sir.
so sales returns. Sales returns, how much?
4,900.
4,900.
900.
So you put it into bracket, 4,900. In accounting, when you put the figure into bracket, it means you are subtracting.
Yes.
So when you subtract, what do you have? Your calculator should be with you.
Yes, sir.
8,100.
Huh?
No.
80,100.
100.
Thank you. So 80,100 has becomes our net sales. So the adjustments I made mention of, the sales, we only need one step to adjust to get the final figure. And that is why the adjustment is done under the second column. Then we push the final figure to the last currency sign column, 80,100. Any question here? Pay attention to the adjustment very well. Any question?
Yes, sir.
Harry?
Yes, sir. So please, the name given to sales less sales returns, we are told is net sales.
Yeah, that's the net
Now,
sales. That's correct.
Yes. So can we bring the net sales figure down to the next line so that
we write it there.
We describe that amount.
If you don't write it, nobody will penalize you.
Yes, for clearer understanding and for us the beginners.
Plus,
those of
you
us
agree that I do it that way?
Yes, sir.
Yes, okay, all right. So 80,100 is known as net sales. Let me capitalize it so that it's known as net sales. Okay. Then I take this one off. Okay.
Sir, please, again.
Again, go ahead.
If there was no sales returns, we wouldn't have a net sales. It will have what is it? What will happen?
That will just be sales.
That will be sales.
Okay. Thank
that
you.
will just be sales. Okay.
All right, sir.
Harry, are you okay?
I'm okay, sir. Thank you.
And say, so
it's not Harrison. Who is asking? Who was asking the question?
Harrison.
Harrison, sir.
Harrison. Okay. Gabriel, you were saying something. What is it?
So is it going to be in the middle still, or to go to the final, the last one? If
The
there's
net
no
sales.
If there's no sales returns.
Then it will come to the last column. Thank you. It will come, if there is no adjustment, it will come straight to the last column. Is that okay?
Yes.
Sir,
Okay. Yep.
please, I want to ask concerning this thing, the carriage outwards.
Please, let's get there. When we get there, we will deal with it.
Yes, sir. The reason why I wanted to ask is that I know that the carriage inwards, no, it's more or less about the purchases, but when it comes to the sales, we don't actually take
Okay. I get you.
Yes, sir.
Yeah, carriage inwards has something to do with purchases. Hassan.
Yes, sir.
Carriage outward has something to do with carriage inwards has something to do with purchases. Carriage outward also has something to do with sales.
Yes,
You are
sir.
right. You are right. Now, the issue here is carriage inwards is when the business goes out there to buy goods and pay an articulator truck driver to bring the goods to his or her shop for sales or for reprocessing. So the transportation cost paid for the articulator driver or the Kia truck driver to bring the goods to his or her premises is known as carriage inwards or carriage on purchases. And that cost, carriage cost, must be added to the cost of the goods purchased in order to know the total amount incurred in buying those goods. Because has it not been the goods, you wouldn't have paid for any transportation costs on goods. And so those of you who sell, you buy, and then a Kia or articulator truck will bring it and you pay the driver for bringing the goods. Then you record in your books that, oh, your purchases is 20,000. Meanwhile, your transportation cost is 500. And you fail to add that 500 to your 20,000. You'll be understating the cost of your goods. So you have to add the 500 to the 20,000, making it 25,000. That is the total cost of goods in your warehouse. A businessman is not a Santa Claus. You know who a Santa Claus is?
We basically know as the Brunya Father Christmas.
No businessman or woman is Father Christmas to be dashing you freebies. So, Hassan, you are right. The cost incurred in bringing the goods to the premises, to the business place, must be added to the purchases. But in some instances, the business will tell you that when you come and buy from me and you live within, how do we call it? You live within, I'm in Takrady, so I will use Takrady. You live within Takrady and Sekendi. Then I'll give you transportation free of charge. So that one, it is not on purchases, it is on sales. You are using it to entice more customers to come to you. When you buy and you live within a certain radius, our truck will go and deliver it for free for you. It is not free. They will pay the driver who took the item there. They will pay for fuel. They will pay for maintenance costs. So it is a cost that the business is incurring to push for sales. That and that one is known as carriage outwards. Hassan, is that correct?
Yes, sir.
That one is known as carriage outwards. And that carriage outwards is an expense. It's a sales expense to the business. It is captured under general or operating expenses, not under sales less returns inwards and up there. No, that one is captured under operating expenses.
All right, sir.
Yes, sir.
The
Thank you, sir.
carriage inwards or carriage on purchases, it is also an expense, but that one is a direct expense on purchases. That is how can we add it to purchases. Is that correct?
All right.
Yes, sir.
All right. Thank you.
Thank you, sir.
So, sir,
Okay.
the clarification I wanted to seek is that the carriage inwards is an expenditure item.
Carriage inwards expenditure item. I don't.
It
Carriage
is classified
inwards
as expense.
it's an expenditure item.
Yes, but say in some books, in some accounting books like Franco's and all that, the carriage outwards in relation to the sales, just as Jonathan said, it is deducted. It is added, rather. It is added to sales.
Carriage what?
The carriage outwards.
No, it will never be added to sales. Go and look at the book.
Okay.
Don't rewrite the book for
misquote the book. All right, sir. All right, sir. But it is confusing though. Why?
So take it from me. Take it from me. If it is carriage outwards, it is just an operating expense.
Expenses. Okay.
It's operating or administrative expenses.
Okay.
If it is carriage inwards, it is on purchases. Add it to purchases before you move to the next step.
Okay. All right.
Okay.
Thank you.
Okay, says sorry, Gabriel.
No problem. Go ahead.
So in a situation whereby you charge the customer with the delivery, well, that one will it be an income or you still book it as
no business charge the customer with delivery. Let's say
I buy. Okay.
Listen. What you wanted to say, and I get you.
Okay.
You bought the item, and they told you have to pick your own transport, but we have a transport department. So go and see the transport department and let them carry it for you. That would be an income generated in the transport department. It is not part of sales.
Okay.
Are you getting it?
Yeah.
So that one is the transport department will prepare its separate account as a unit operating on its own.
Okay.
So at the end of the year, if the transport department makes profit, it will pay tax on its profits alone. You know, we have haulage companies.
Yeah.
Haulage companies, what do? They cut goods and other things for customers, and they charge them for their services rendered. And they prepare their final account at the end of the year and pay their taxes on their profits generated. So that will be a separate account on its own. It will not form part of sales.
Okay, thank you.
You're welcome, Gabriel. Can we move on?
Yes, sir.
All right. So we move to after net sales, we move on to less cost of sales. Less cost of sales. So before we move to the less cost of sales, what will occasion a customer to return goods to the business? What are some of the reasons a customer will assign in returning goods purchased back to the business? Quick. Let's get about 3 responses and let's move on. We are learning.
Expiration.
Okay. Wait. Cripson Da. Cripson is not hearing me. Let's move on to George. Yeah, Cripson, go ahead.
So when the right goods are not delivered.
Good. When the right goods, in terms of brand, in terms of type, are not delivered, the customer can decide to return it. George Oji.
Sir, can I say that in case the item has been expired, something,
expired
you can
goods.
return it back?
Expired goods.
Yes, boss.
Yes, you are right. Expired goods.
Thank you.
Ramatu.
Please, if the goods are also not suiting their preference.
Okay, the preference, the type. If you talk of phones, we have different brands of phone. So you ordered for Samsung and they bring you Camon 50. Definitely you return it. Friedricha. Is it Frederica? Okay, Frederica. Frederica Manson.
Yes, sir.
Mm-hmm.
Please, when the goods delay, you can also choose to return it.
Okay, when the goods delayed, because you needed to execute a contract and they delayed in the contract, you've stated clearly when the goods should be supplied and they delayed in bringing it, come on, you have every right to return it. Okay, the last person, Tony Mens. Tony Mens.
It's when goods are not the same as ordered.
Okay, when they are not the same as on the ordered document. Okay, purchase order. Rebecca Sawanu.
Yes, sir. And please, I wanted to talk about when it's being damaged.
Damage, yeah, damage can also damage here. You have to be careful.
Yes, sir.
If the supplier is the one providing transportation, then the damage, the supplier must bear it. But if it is you who went with your own cargo to pick it, the moment it leaves their premises, there is no issue of damage. You have to bear it yourself. Okay. Last two, then we move on. Enim.
Yes,
Harry?
sir. Sir, could this also be one of the scenarios for the sales return? Yes. So where there's an agreement between the supplier and the customer that where the customer is unable to sell the goods, he should bring it back to the supplier.
Yeah. That one is also a possibility. That's correct. The last one, Hassan, Jonathan.
Hello, sir.
Hassan.
Sir, mine is a certain question that I want to ask.
Ask.
The closing stock. That I want to know whether it's supposed to also be added to the sales or should be rather less from the net purchases or.
Okay, so we are going there. So let's go there. Then your question will be answered. Okay.
Yes, sir.
Okay. All right. So we move on. So we come to less cost of sales. Less cost of sales. Less cost of sales. Cost of sales. Now, when we say cost of sales, how do you understand it? What does it mean? Cost of sales. What does it mean? Cost of sales. Cost of sales. Harrison, is it an old hand or a new hand?
It's the new hand.
Go ahead.
Okay. So what caused you to make that sales?
Good. What cost you incurred to make that sales? Thank you very much. Let's move on. So you understand it that way. So one of the costs is your opening inventory. So check from the question if there is opening inventory.
Yes, sir, there is opening inventory.
What is the figure?
16,400.
Okay, so you adjust the opening inventory with the net purchases to get your final figure to be deducted from the sales. So the opening inventory will come into the middle currency sign. You said it's how much?
16,400.
16,400. Thank you. Then we add purchases. Add purchases. Do we have purchases?
Yes, sir.
So purchases will be adjusted. 2 steps. So we record it under the first column. The items that will cause purchases to be adjusted are carriage inwards, returns outwards, drawings of goods. These are the 3 things that will cause purchases to be adjusted. So purchases, what is the figure?
45,500.
45,500. I like the way all of you are contributing to the discussion. Then we go and check, do we have carriage inwards or carriage on purchases?
Yes, sir.
Yes.
Okay,
Yes.
what is it? Is it inwards or on purchases?
On purchases.
Okay, carriage on purchases. I hope the ladies are with us.
Yes, sir.
Okay. So we said add carriage on purchases. Add.
Should be less.
Hey, Maza, stop that. Where from the less? Add carriage on purchases. When you pay a transport company to bring the goods to your shop, the money you pay to the transport company, do you add it to your purchases or you subtract it from your purchases?
You add.
You add. Thank you. All right. Carriage on purchases is how much?
3,000.
3,000.
3,000. Thank you. Okay. Then, do we have returns outwards? Or purchases returns?
Yes, sir.
We have it.
Yes, sir. Purchases returns.
Yes,
2,500.
Good. Good. So let's add the 45,500 to the 3,000. That will give us 48,500. Do you agree?
Yes, sir.
Good. Then we go and less purchases returns. So the goods we bought is not as per our requirements, so we are returning it. Purchases returns, how much?
2,500.
2,500.
So you put it into brackets. 2,500. Bracket close. And that will give us what?
Cost of goods available for sale.
Good. That will give us a figure known as what?
Cost of goods available for sale.
46,000. And that 46,000 is known as COGAS. Gas. Cost of goods available for sales. Hey, do we have drawings of goods? Not just drawings. Goods withdrawn. Do we have anything like that?
No.
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 Okay. Right. No, this is not COGAS. This is net purchases. Thank you. This is net purchases.
Yes, net purchases.
Hello,
net
sir.
Purchases. Yes, sir.
After adding the carriage on purchases to the purchases,
to get 48,500.
48,500. That figure. Is there a name? Is there? Can we give
a name for it? No, there is no name. Let's move on.
Okay. Okay. So what about What about
You see.
the cost of goods available for sale?
We are now going to determine it.
Opening inventory plus it.
Sir, still on that, I just want to understand this. When you have your opening stock, then you add your purchases after taking out your carriage on purchases from the purchases. Then you add it to your opening stock. The stock that you have, this stock that you have, isn't there a name for it? Like, isn't there a name for it?
That is the next thing we are going to do.
Before the purchases returns, or?
No.
Anyway, let's continue.
That is the next thing we are going to do. So, in Kreni Basin, is it not? My hometown will say Bojidi, Ojibodi. Okay. All right. So let's move on. So our net purchases, we now add it to our opening inventory. So add 16,400 to 46,000. What are you going to get?
62,400.
62400. And this is what is known as the COGAS. Harrison.
Yes,
Harry.
sir. Yes, boss.
So this is what you are asking for. The opening inventory plus the net purchases for the period put together will give you cost of goods available for sale. So the next step to ask is,
closing inventory.
do we have wages? I hope you guys are paying attention.
Yes, please.
After you determine your cost of goods available for sales, if you have wages, then you add wages to get your cost of sales. If there is no wages, then your cost of goods available for sales represent the cost of sales. Is it clear?
Yes, sir.
Good. So do we have wages?
Yes, please.
Yes, sir.
Just wages, so not wages and salaries.
Yes, wages.
Okay, so we add wages. We add wages. How much is the wages?
12,500.
12,500.
12.
Oh, okay, 12,500. 12,500. Good.
Hello, sir.
So now, when you add the wages to the cost of goods available for sales, you now get your cost of goods. No.
Hello, sir. Sir, the closing inventory, where will it be?
Yes. Good. So let's move on. I'm getting confused myself. Okay. So add wages to the 62,400. Add wages to it.
74,900.
74,900. Good. So 74,900 is your cost of goods. Cost of goods. Is it cost of goods available for sale? No, that's no name for it. But we now less closing inventory. After this figure, you less closing inventory. What is our closing inventory?
19,500.
19,000. Have you all seen the closing inventory? It's bottom of the trial balance. 19,500. So take 19,500 from 74,900.
55,400.
55,400. So the 55,400 is the cost of sales. The 55,400 is our cost of sales. Okay? What we are looking for, this one that I've highlighted yellow, what we are looking for, that is what we've gotten here. That is the cost of sales. So you realize that we adjusted the purchases, we brought it to the second column, we came to do another adjustment here until we arrive at the final figure we are looking for. Have you seen it?
Yes, sir.
Yes, sir.
Good. Good. Thank you.
Sir, please, question.
Yeah, ask.
The wages, you see, we added it here. So if it is wages and salaries, that one it tends to expenses. How does it be that way, please?
So if it is wages and salaries, we can't separate the wages from the salary. So we take it to the operating expenses.
Yes, sir.
Hello, sir.
Please. Hold on. Jonathan, is that clear?
Yes, sir.
Please, the question Jonathan asks is to all of you.
Yes, sir.
Because you might come across a question where you have wages and salaries. The moment you treat it here, you get it wrong. It must be taken to the operating expenses. But if you have only wages, you treat it here. Okay. The person who wanted to ask question, Ro.
Yes, sir. Yes, sir. So please, I want the difference between this wages standing alone and then wages.
So wages is a direct cost to trading. You know, when you go to some of these, those who sell rice, those who sell hardware like cement, iron rods, and the rest, tiles and coal. When you go and you want to buy, the one who takes the money is not the one who packed the item into your truck for you. True or false?
True.
So those guys or ladies around who carry the rice into your car or carry the cement into your car, remove the iron rods and pack it in your truck for you, those guys, they are purposely there for sales. And so when they finish their work for the day, the store owner pays them off.
Okay.
So the next day, he or she can decide not to come.
Okay.
He only can get his daily money and goes away. But the one in the store receiving the money, issuing the invoice, he or she is paid at the end of the month.
It's a periodic, this one. Okay.
Good. So his salary is actually tied to operating, general operation. But those who carry the rice, those who carry the cement and the rest, there is tied to the sales. So it is treated as what? Direct cost to sales. That is why we add purchases.
I get you.
Okay.
And
right.
And again, sir, the cost of sales figure, shouldn't it come down to the next step?
If it comes down, it's the same as it being on the same line with this figure.
No, for the purposes of the description.
So you want to bring the cost of sales here again?
So cost of sales down. And then since we are deducting it from the sales.
So you want it to be like this?
In a bracket, yes.
Yeah. So you put it in a bracket. Okay. You put it in a bracket. All right. Okay. So let's subtract. What are we going to get? Let's subtract.
24,700.
So we are subtracting 55,400 from 8,100. Is that 24,700? 24,700. So this figure is known as the gross
profit.
Thank you. Gross profit.
Sir,
You
please,
guys.
you've not written the cost of sales there.
You want me to write it?
Yes, for some of us, we have not done accounting before, so we want to get the clarification, so that when we are studying, we know this figure is this figure is this.
Okay, I've written it
Thank
for
you.
you. I've written it. I've done it.
Thank you, sir.
Okay. So that is the cost of sales as requested by our brother. So let's move on. Okay. Yeah.
Sir.
Yes, Crispin. Is it Crispin?
Question. Yes, sir.
Yeah, Crispin. Go
Sir,
ahead.
I'm a bit confused. I'm still not locating the closing inventory.
You have not seen the closing inventory.
Yes, sir.
Are you saying you have not seen the closing inventory?
Yes, sir.
From the
Open your
probably
trial
from
balance.
the
Do you have your question? Have you opened your question?
Yes, sir.
So go below the trial balance.
Okay, the inventory at 31st. Okay, sir.
Guess what?
The inventory at 31st December 2018 was 19,500. Is that the closing inventory?
Yes, please. That's the closing inventory.
Thank you.
The one in the trial balance is the opening inventory. The one at the end of the trial balance is the closing inventory. And they have indicated at 31st December 2018, that is the last day of the business. So that's the closing inventory. Da, are you okay?
Yes, sir.
Yo, thank you. Okay, so from gross profit, we now look for other income. From gross profit, we look for other income. And what are these other income? They are monies made by the business, but not through buying and selling. It might be through investment. It might be through gifts as a result of buying in quantity or as a result of paying early on time and all those things. And this other income, you can locate them at the credit side of the trial balance because they are income. So let's go. If you can identify some of them.
discount received.
Discount received. Discount received. What do we mean when we say discount received?
Discount received, they are the incomes which are gained by investments. Hey, no, sorry, sir. These are how do I say this thing? Like the discounts are the amounts, the reductions on purchases.
Okay.
Yes, sir. Which are given by the suppliers.
The reduction on purchases by the suppliers to,
yes, sir. To the buyer.
To the buyer.
Yes, sir.
Okay. Right. It could be either in terms of quantity, early payment, or to establish trade relations.
Yes, sir.
So we have trade discount, we have cash discount, we have quantity discount. Buy one, get one free is a quantity discount. Buy two, get one free is a quantity discount. Okay, let's move on. Apart from discount received, what again?
Income on investment.
Income on investment, correct. Income on investment. That's great. Our ladies, are you with us?
Yes, sir.
Okay.
Yes,
They
sir,
say
we
they
are
are
here,
with us.
but Tammy, I'm happy with you.
You are what?
Half with you. That will make my eyes plain.
It shall be well, don't worry. So income on investment. Income on investment, what is the figure?
That is
1,900.
1,900.
1,900. The one who said that you make plenty for in iTop. What's your name? Hello, my lady who said that you make plenty for in iTop. What's your name? I want to help you. If you will not own up, then I'm moving on.
She's
Okay, let's move on.
her network is giving her problems.
Are you the spokesperson?
Because she cannot speak now.
Okay, so when she speaks, then I will respond to her. Okay.
Okay.
All right. Because I wanted to direct it to her personally. Okay. But it will go to all of you, all those who are having challenges. Okay. Do you have any other income?
So trade
Interest
payable.
on loan.
Hey, trade payables, no.
Interest on
Now,
what about interest on loan?
Interest on loan.
Interest on loan, you are paying.
It's an expense.
Oh, okay.
So, you know, the trade payable, since you said the what do you call it, the incomes have the credit balances, that's why I'm saying this thing to see whether it will be wrong or
Trade
right.
payable is a liability, please.
It's the creditors.
So what about the receivable?
Receivable is an asset.
Okay.
Debtors.
Sir, the interest on loan, what if you give the loan out and you are getting interest on it?
It will go to the credit side. Then that becomes an income for you, other income for you.
Maybe investment. Can it be investment, interest on investment, or?
Yeah, you have given loan to other companies. They
So
will
it's an
pay
investment.
interest to you. So that interest received on loan will be at the credit side, and you add it to your other income. My lady who asked the question, are you okay?
Yes, please.
Good. Okay. Are you the one who said you are not seeing top crowd?
No, please.
That pleases me. It's Fidaus.
Okay, Fidaus.
Yes, sir.
Fidaus, I want to respond to you. You see what we are doing. You realize that a lot of your colleagues are in team. So all you need to do is to pay rapt attention and follow it small. And identify those people. When we close from class, give them harbor hook and tell them to take you through.
Yes, sir. Harrison, please, have you heard, sir? I beg, help me.
That's right. Harrison, you.
Harrison. You say she should give what?
Harbor hook.
Harbor.
You don't know harbor hook, eh?
Oh, no, I just wanted you to repeat it so that.
It is not any bad harbor hook.
That one doesn't matter.
I'll buy
We have different types.
Gabi.
Yes.
You know how we do it. The last time the exercise we did, I think it was helpful, so we'll do it after.
Yeah.
Okay, I like that. Let's move on.
God, please, the invested income is not 1,900, it's 500. Or I'm not.
Income on investment. Go and check.
Okay. This is the third illustration. Sorry.
Okay, that's okay. Don't worry. All right, let's make progress. So that is all. Okay. That is all. So please add 24,700, 520, 1,900. Add these three figures together to give us our total income.
32,120.
Okay. Accounting will not write it, but if I don't write it, Harry will come at me.
All right.
What did he say is the figure?
32,120.
32,120. Okay. So after we've determined our total income, We now move on to take out all our operating expenses. In some books, they will say general and administrative expenses is the same thing. But me, I use a simple word, operating expenses, because these are general operating expenses that you incur to run the business. So we go, less operating expenses. Okay. Less operating expenses. So in order for my student to always get it, because this one, if in exams you are writing, you are not determining any, so you are not doing that much work. You are only putting the figures at the right position for you to get your marks. So I normally guide my student, at least at the operating expenses column, you should get everything correct. How do you do that? Start from the top. Start from the top. Furniture and fitting, that figure will go to the balance sheet in statement of financial position. So we will not take it. We have depreciation on furniture and fitting. We will take it. Okay?
Yes, sir.
So we go there. Depreciation into bracket F and F. Depreciation of furniture and fitting. How much?
30,000. Hey, 5,000. 5,000, sir.
5,000. So this is what you are going to do. You are just all the operating expenses under the second currency column. Then you get a total and move it to the third currency column on your right as a final figure. So you said 5,000. The next one is what?
Depreciation on motor van.
Good. Do you agree?
Yes, sir.
Depreciation on motor van. Let me correct it. Motor van. Okay. How much?
8,000.
8,000. Good. Then we move on to
Mr. Avevor.
General expenses.
Come again?
General expenses.
Somebody said Mr. Avevor.
Yes, me, Gabriel. Our time is up.
Oh.
We have only 15 minutes rest for our next class.
Okay. All right.
Can we do 1 weekday evening?
Can we do what?
1 day evening, like 1 weekday evening.
Can we do one in today
Weekday,
evening?
one of the weekdays.
Yeah,
evening.
one of the weekdays. That's very good. I'll be available. So just speak to the IT department. If they will let us use this link, why not? If not, we'll generate our own link and do it. But because they do record it, that's why I said speak to them and let's see. And I agree on the particular evening, the dates and time with your colleagues, and just get back to me. Okay.
Okay.
Thank you very much for coming.
And also our assignments, the portal is still not open.
It's still not open. I'll work on it because I'm going to give you assignment on this one too. I'll work on it in the course of the week. You just keep the solution. When I said I've opened it, then you go and then upload. Okay.
Yes, sir.
Okay.
All right. Oh, the class has been interesting today, but that our time was so limited. Thank you for coming. And as I said, Fidaus.
Sir, I'm here, sir.
Make sure you fall on them. And please, colleagues, anybody who comes to you for explanation, be glad and willing to help your colleague. The more you help the person, the more you concretize your understanding. And all of you will move in unison, getting good passes and moving on to the next academic level. Okay?
Yes, sir.
Yes, sir.
Enjoy the rest of the day.
So
You
we
Thank
have
you.
to. Oh. Today's class is interesting.
No.